Hey everybody, welcome back to LikeFolio podcast and YouTube channel. We're here with you today because it's coming up on really one of our favorite times of the year. It happens 4 times a year, and that is earnings season. We had a great earnings season last quarter. We're going to kick off. Netflix is coming up. It's really kind of the kickoff week for us for our 10-week earnings season. And so we wanted to get through 3 of our top predictions for this earnings season. We normally have in an earnings season probably 50, 70, sometimes 100 trades. But here's 3 of the ones that we really like to share with you today. But before we get into that, we got to brag on ourselves because every month we've given you 3 stocks or 3 ideas. And once again, it looks like we went 3 for 3, even though I was at the bottom of the pack this time.
And bottom of the pack, 8% in a month.
Yeah, Trade
I
Desk
wish
did
I could
well.
make 8% every month.
Trade Desk did well, but we couldn't keep up with Megan's recycled shoes.
I know. Who'd have thought? Well, we did.
You did, yeah.
Yeah, and Bitcoin's making a little run. Got touched over 30. I'm not sure if it stayed there.
Yeah, over
Bounced
30,000. It's
Yeah.
on the track to all-time highs, I think, probably
Yeah.
in
That's
2023. But that's the brag for this time. But let's get into these 3 picks for this time. Before we do, we always like to look at the trends that are driving forces behind whether companies are facing a headwind or have a tailwind behind them. We're really seeing good indications in makeup, sports betting. The cruise line industry looks good. And of course, artificial intelligence and DeFi looking good. On the negative side, at-home fitness, Peloton, streaming, which we'll get into with Netflix, home renovations, used cars, all those type of things that really require the customer to spend some money. They're really tightening up at this point, I think.
Yeah.
They are. It's interesting. You can kind of see a trend among the trends, right?
Yeah.
I mean, you've got the higher price stuff like cruises and luxury goods. There's hanging in there, but people just going out and spending money at restaurants, department stores, food delivery. I think it's going to be an interesting quarter. Like the early look is somewhat bearish, wouldn't you say, Megan?
Yeah. Whenever we look at, how these companies fall, and of course, earnings scores will change as the weeks go on, but that neutral band is growing. But you're seeing that kind of bullish band of all the companies that we see that's shrinking a little bit, more companies falling into that neutral. So I think that, consumers in a lot of ways are just trimming the fat. They're cutting out a lot of low-hanging fruit in budgets for sure.
Yeah. Everybody's wallet gets a little tighter when interest rates aren't 1% anymore. So I think this is going to be a difficult earnings season across the board for a lot of companies. Today we're going to go through 3 of them, 2 of which we think we have a bearish outlook, at least initially going into the earnings season, and 1 bullish. We're going to go through Starbucks, Netflix, and again, repeat with Megan's multi-bagger winner, ONON, running. Let's start with Starbucks. Megan, what are we seeing here? We've got a negative 22 earnings score, which in the LikeFolio world means slightly bearish.
Right. And so I think that there are 2 things here that are red flags whenever we head into earnings. And you can see the green line. These are purchase intent mentions, people talking about actually going to or picking something up from Starbucks. Those are down by about 20% year over year. And then at the same time, you've got happiness down by about 5% year over year. So happiness, a lot of times, is a longer term indicator, but for Starbucks, in my opinion, this could look like a warning sign for pricing power. So that's kind of how Starbucks has gotten over the hurdle in the past. They've increased the price of a lot of their items, and this is really starting to weigh on consumers.
Right,
and
the stock's on a nice little run, which is my favorite time to be bearish, right? I mean, I always like to be a contrarian. If the stock's down and I've got good data to the upside, that's my favorite time to be bullish, and vice versa. In this situation where it's pulling back a little bit, it's my favorite time to be bearish when the stock's up.
Yeah.
We got some sample tweets here.
Yeah, it just shows the consumer is stretched. The consumer is stretched big time. And Starbucks has counted on being able to get more dollars per customer for a really long time. And we're starting to see indications that customers are kind of over it at this point and maybe looking for lower cost solutions.
Correct. And I think it is relevant to point out, our data, we're really focusing on those English speaking consumers.
Yep.
So we don't have as much insight into China and some of those international markets, but at least here we've got a really good pulse and it's starting to show some weakness.
Yep. And they report, just looked it up, it's May 2nd.
Cool.
So they report on May 2nd after the bell on that. It's a Tuesday.
For those of you in horse racing or land, that is the Tuesday prior to the Kentucky Derby. So that's how I'll start registering everything for the next month or so. Is how it compares to the Derby. Netflix will be to kick off earnings season. That's always the Tuesday. Is it the Tuesday?
I think it's Thursday, isn't it?
Of week one. Yeah,
actually, you know what? I think you might be. Let me look it up.
Yeah. I think last time it was
It's
Thursday.
always in week one of earnings season for us. And it's always kind of the kickoff. Is a difficult stock to predict because they have so much recurring revenue and subscription revenue. But it is a pretty negative score, at least right now, on Netflix. So we'll be taking a bullish tilt on this. Primary reasons,
bearish.
Bearish.
Yeah.
Oh yeah, sorry, bearish. What was it? -55, -52?
58. Yeah.
And you're right. It's Tuesday.
Okay. But we can see why it's negative and why we're bearish. In LikeFolio's world, we're able to really drill down into, are consumers subscribing to Netflix at a higher rate than usual? The answer is no. They're subscribing at a lower rate than they were a year ago by 30%. Not anywhere close to as bad as Disney Plus or HBO Max, but still pretty bad.
Yeah.
And even viewership is down, which I think, again, speaks to the likelihood of people churning or canceling their subscription. The less people are watching this, the less addicted they are to the service and the more likely they are to pull the plug on the subscription.
Yeah.
A couple notes. So it's year over year that we're looking at. So there, of course, there's seasonality with viewership as the weather changes, people going outside, staying indoors, all that. This is year over year, so that takes that out of play. So these are good numbers to look at. And then also think about who's reporting when. Like Netflix is kicking this off, and then you're going to have some of these other companies like Disney reporting a little bit later. Netflix we have doing better than all of those, but doing poorly. Yeah. So it's going to be interesting to see how maybe Disney reacts to Netflix. Even though it's not one for one. Disney has other segments of their business, but it's always interesting to compare when companies report a little bit and then later on their competitors report. So Netflix could start things off on the wrong foot for everyone.
Yeah. And I want to highlight the reason that these two charts are on the screen right now is very intentional. Whenever we studied our internal metrics of correlation in terms of Netflix revenue, the highest correlation was new subscriptions alongside viewership. Those were the two most. So these two are the two most important charts to watch. And if you remember last season, Netflix was in the green on both of these charts. Just barely, but it was in the green. Maybe 3%, maybe 8%. So that's the big shift that we see. Yep. That's why this season, I guess, is different than last quarter when we were looking at things. Even though Netflix is still leading peers, that it's lost a little bit of that edge.
Yeah, it's switched, and I think that's a big deal. And we think that there's going to be a difficulty for the executives of Netflix to really be gung-ho enthusiastic about the rest of the year. They may put up good numbers, but their outlook for the year is usually what drives the stock, and we think that could be somewhat weak. And like we said, we like these divergence opportunities. The stock has moved up. Purchase intent levels are moving down. So Netflix overall, we're going into this with a bearish bias. LikeFolio subscribers, those of you who are with us on our paid platforms, you'll get those specific trade ideas, via email like you always do. But for those listening, if you have Netflix in your portfolio, it might be something to look at hedging or at least understanding the risk that you're taking going into earnings.
Yep.
Right.
All right, Megan, you've got to take this one because you have absolutely crushed this stock. It was one of our biggest winners, over 100% gain on the trade that we made for earnings season last season, and we're looking to repeat again this season.
Yeah, so I think that these two charts are pretty incredible. This is one of those where last season was such a success. You say, okay, can this company keep up this rate of growth? And if anything, it's accelerated. I think all of the buzz surrounding ONON only helped to kind of increase its brand hype. You can see that giant uptick in mention volume. And then also look at that demand pace for that second quarter. I know we're early on, but this is just a nice nod to guidance. I like to look at that far right bar as a pace bar whenever I think about things. And so this to me gift sign that the company can not only put out a nice report, but also be hopeful looking forward.
Right. It's almost like when on earnings report, that's what investors want to hear is obviously how much did you make this quarter, but they're always going to ask how much are you on pace to make? What's the future look like? What's the next thing look like? So that bar is really strong for that question.
Yeah. And I think that ON is operating in a really nice niche. Luxury is one area that we've seen outperform, seen the high earning consumer much more insulated from the impacts of inflation. A pair of these shoes, if you're not on the, subscription plan like I am, your average cost, you're paying upwards of $150 for a pair of running shoes. So, these aren't your deal shoes.
Yep.
And this is just a sector that we're seeing strengthen and continued strengthen. And it helps that they have that added, sustainability recycling option for other consumers too, where that's their main driver.
Yeah, there's a lot of time between now and when ONON reports, I believe.
Late June.
Yeah.
So there's a lot that can happen there, but I really love that we got the stock move from $20 to $30 almost overnight on the earnings report, almost exactly like Megan predicted. And then it has held there. It hasn't pulled back. It's held in the low 30s. That type of strength, we could see as we go into this June report. We'll have to see how our data holds up and how the earnings score holds up. But by the time subscribers get this information, this is one that I really look at for us to put back to back, triple digit gain trades on. And so I'm very excited about ONON. Again, we always love when we're hot on a name, and this is definitely a name that we're hot on.
Yeah, we've had some like Crocs that we've been hot on we were hot on for a long time. We won multiple quarters in a row. I love those. Sometimes we go hot on one for 6 or 8 quarters, and then the data turns and it's like painful that we have to switch. That's not the case yet. We'll see. But I would love to start a new trend with ONON. And we'll have the exact score put out for our members right before they report. Otherwise, people have to decide how they want to play it. And I will say those shoes are super comfortable. Super comfortable.
They are. They're cool. Yeah. Earnings season's rife with opportunities.
Yeah.
Hundreds and hundreds of companies report in the next 3 months. It's the one time of the year where Wall Street reveals, or where the company reveals to Wall Street what LikeFolio data is already seeing, and it gives us a huge edge on overnight moves, really quick stuff. So if you're not a member of LikeFolio, if you're not getting these earnings sheets, most of you I think are, but if you're not, hit me up, Andy@LikeFolio.com. I'll send you the information. Let me know that you saw it on the podcast. We'll make sure you get the very best pricing possible. But Andy@LikeFolio.com if you'd like to get more information on that. And until then, hopefully this is going to continue the streak of us going 3 for 3 on our picks.
Yeah, sure.
I know.
I still like Bitcoin. I still like the trade desk, and I still like ONON from last time. So if you're in those, you're in good shape, and we'll just continue to ride this wave.
Yeah.
Sounds great.
All right. See you next time. Appreciate it.